guys, it's Arielle here from Fix My Books, and today we are going to talk about a very interesting topic, which is how to survive an HST audit with the CRA. And so I think that this topic is very interesting in general, or maybe that's just me, but I'm making this video because I believe that the HST audits are coming, right? Like winter is coming, the audits are coming. And I thought I would just make this video as kind of like a general guideline on how to survive an HST audit with the CRA. I've been through several of these audits / reviews. That's what they are. And if you don't pass the review, then it will turn into a full-blown audit. However, I and my clients, obviously we do things right. We always pass the reviews. So it's never really turned into a full-blown audit. So this is what I'm going to show you is kind of the first letter that you will get from the CRA when you are being reviewed / audited. And then if you cannot respond or comply or provide the documents within this letter, then that is when it will turn into a full-blown audit, which again, I've always passed, so I have no idea what they ask after that because we do things right and we can provide all the documents. So I'm just going to go through this video, but before that, some disclaimers / warnings, okay? This is only for people who have done their bookkeeping through QuickBooks Online. I will be showing you how to pull the reports in QuickBooks Online. So if you are, using another accounting software, this is not going to be applicable to that software. You may watch through the video and then at least you would have an idea on maybe how to pull these reports from your accounting software, but just know I'm going to be doing this through QuickBooks Online. Next is also that obviously this video assumes that your bookkeeping has been done correctly, as if I did your bookkeeping, right? Like just make sure that you understand that. Like when we're going through this video, I'm assuming that you did your books correctly as if I did it. And so like everything in there is correct and perfect. And that's what we're going to submit to the CRA. Next is that this video is only going to show you how to pull the reports / documents the CRA is asking for. It's not going to show you exactly, what it has to be there in that report, as obviously that will vary depending on what the CRA is asking for. However, the letter I'm going to show you from the CRA is kind of, I've been through several of these, like more than a handful. So I've seen this letter, been given to like how many of my clients, and it's all generally the same. So yes, there might be differences in terms of the specific things that they ask for, but generally this is like what they ask for. This is like the standard 5 things that they ask for, right? Okay, next. Another warning, this video only serves as a guide and gives out general information and is not to be used as advice on how to respond to the CRA in your specific situation. So now that that is out of the way, we can get started. Okay, so first things first. Okay, why am I being reviewed / audited by the CRA anyways? So there are a couple of reasons for this. Number one is spot check / random. So they randomly just chose your HST return, right? That's why you're getting checked. Next is there are red flags within your HST return. So if your amounts do not match, your sales in your HST return does not match your sales in your business return or your corporate income tax return, your T2, automatic red flag, most likely will be reviewed. Next. So with this as well, if you think I'm joking, what you can do is to look at pretend you're quarterly, let's say. What the CRA will do, and they've said this to me over the phone, is that they will add up the sales for the 4 quarters of the HST returns that you filed. And if that does not add up to the sales for the year in your T2 corporate tax return, that's a big red flag to them. And that's a reason why you could be audited, right? Next is you are getting a large HST refund. So usually any refund I've seen over $500 most likely will be, reviewed by the CRA. And again, that's just a general rule that I've found. Next is that you have been non-compliant, meaning you haven't filed your HST return in like 2 years, and then you're filing now, and then they're like, okay, this person's really, really late. Now, like, we're gonna audit their HST, right? That's another thing. So just be aware that late filing and late paying are two different things. So if you file your HST return on time, but you fail to pay on time, those are two different things. You can work out a payment plan with the CRA. Most of the non-compliance is really with the fact that you didn't file on time and not that you didn't pay on time. And lastly, your industry is prone to HST audits. So there are different industries that are actually very prone to HST audits because of reason number 3. They get such large HST refunds, like, for example, the largest one I've done an audit with is around 60 grand for 1 quarter, guys. So just imagine for the year, if it was 60 grand per quarter for the year, it's almost $250,000 in HST refunds, right? So the largest I've done is 60 grand in 1 quarter, but just be aware that HST refunds go that high, that large, and there's a reason why. Obviously, the CRA is going to double check whether or not they're going to give you 60 grand, right? They're going to make sure that you filed correctly and you deserve, per se, the 60 grand. So just be aware that you are, like, in certain industries, you are very prone to HST audits. Next, the industries. Of course, the next question will be, okay, so which industries are prone to HST audits? Okay, here we go. I'm going to tell you guys. Number 1 is e-commerce. My specialty, my love, unfortunately, is very, very prone to HST audits. So another industry is medical. So I do have some clients in this industry, and they've been, audited/reviewed. Food related. Yes, that one too. I'm not sure if I mentioned here, but previously when I was just starting out my business, I was working part-time for an accounting firm, and then I was also starting my business part-time. And that accounting firm that I was working for was heavily into restaurants. So all they did was like bookkeeping, accounting, tax filing for restaurants. So we did go through some HST reviews for that and other food related companies, like, those like meal kit deliveries. Those companies are prone to these as well. So like anything food related is prone to an HST audit because of that industry, because of how HST is charged in that industry. And also real estate. Real estate is actually quite prone to HST audits, but not every single thing in real estate. Only certain things in real estate. Like the one that I've been through personally was related to a mortgage broker. And I'll touch on that more later on. Okay, so these are the main reasons why these industries are prone to HST audits. So I'm not just telling you guys, right? Like, oh, this industry is prone to HST audits because I said so. There's a reason why they are. So number 1, you can see here, like with e-commerce, it's kind of special. And then everything else kind of has the same reason why they are prone to audits. So for e-commerce, the number 1 reason is because there are a lot of sales outside of Canada with no HST being charged. So what the CRA likes to do is they like to double check. Let's say you filed your your HST return, you have $1,000 in sales. They're expecting that you charged, let's say you're in Ontario, 13% HST. If you did not charge that, right, that could be a reason why they want to review you. So just the fact that e-commerce is, obviously like an online thing and sells all around the world, a lot of the sales, especially being in Canada as a Canadian, there are so many companies that do cross-border business. So they're, let's say, located in Canada, but they're selling in the US. So that's like very, very common, which is why we have obviously the number one reason. So many sales outside of Canada with no HST being charged. Number two is that you have a lot of sales in different provinces. So we're not just talking about like a flat 13% HST Ontario tax, right? You have sales, let's say, in Alberta, 5%. You have sales in BC, which has both not a harmonized sales tax, but GST and PST. So those are different rates as well. So with that, again, because the spot check is very basic that the CRA does, when you're not in line with that, they have questions, right? So let's say you're in Ontario and you didn't charge 13%. Let's say you only charged 5%. They're going to ask you why. And if you can justify that and say, it's because all my clients are in Alberta and I only charge them, 5% GST, okay, we're good. We're happy. But you have to be able to explain that to the CRA, why it's that way. And obviously, last and certainly not the least, this is the number one reason, is because e-commerce companies usually have very, very, very large HST refunds because of the duties and taxes that they pay when they import the items here into Canada, and then they'll sell it abroad. For example, and again, you can tell e-commerce is really my space because this is like, I know this industry inside out. So for example, somebody buys something from China, imports it into Canada. They will then pay, obviously, duties, taxes, right? GST on what they imported on that product. Right? So that's a large ITC. However, most of the sales of this e-commerce company is to, let's say, the US. So they paid a lot of ITCs here in Canada and they are charging no HST because their sales are outside of Canada. Now, this is a perfectly common and legal situation. You are not doing anything wrong by doing this. However, because it is obviously a weird situation that is only common in e-commerce, right? As an industry, just know that is why you're more likely to be reviewed by the CRA in terms of HST. Okay, next, medical, food, real estate. The reason for these three are quite similar, so that's why I'm just putting them all together. So number one is because there is a mix of taxable and non-taxable types of sales. For example, right, there are different things like an easy one, let's say food, right? You sell a bottle of water, no HST, but you sell a meal with, that has HST. So that's just an example of that mix. With medical, let's say there are certain types of things like that you don't charge HST on, and then there are certain types of consultations, like if it's like admin work, if you are writing a letter, let's say for somebody, that has HST. But if you're doing an actual like medical procedure session, things like that, that has no HST. So it also depends on your industry and then the mix of those sales. You're more prone to that if you don't charge a lot of HST on your sales. Next is the reason why is because most people actually don't know how to do step 2, right? There was actually a situation where I was doing the bookkeeping for a company that is in these like special industries. And after I did the bookkeeping, the accountant filed the HST return, not me. I just did the bookkeeping. The accountant was not even aware of this special rule that it has to be adjusted a certain way. So they filed the HST incorrect, very much incorrectly. And I got a call from the CRA because the accountant wasn't answering their phone and I'm an authorized representative on that client's account. So I got a call from the CRA, and the CRA was like, what did you do? How did you calculate this? This is wrong. This is how you should calculate it. And I just told them, look, I didn't file the HST return. The accountant did. I will communicate this to the accountant. So when I actually spoke to the accountant about it, they actually had no idea that it had to be adjusted in proportion to the HST collected. And yeah, a lot of the ITCs got disallowed, which ended up with the client having to fork over, I think it was like from a $4,000 refund, they had to like pay, I think, $8,000 or something. So the difference was like $12,000 if you think about it, because it was a $4,000 refund and then they had to pay $8,000. So that's what happens when you have someone who is not well versed in that industry and then they file the HST return, right? And it's not that, what do you call this? It's not the fact that like, those ITCs just go away, right? Like poof, they disappear into the air. You can, instead of ITCs, you can adjust that as expenses. So there is a way to like claim that back in your tax return. That's not like it's gone forever. But again, I'm just telling you guys, I've seen this happen and the accountant filed it, not me. That's all I have to say about that. Like that's the one of the biggest mistakes I've seen, and it was because of an accountant that was clueless in that industry. And I'm not saying that, accountants are horrible, things like that. I'm just saying this particular accountant didn't know the rules of that industry. So next, because of the mix of taxable and non-taxable sales, you may end up with large HST refunds. So again, because of that, you're more likely to be audited, or you're more prone to be, to having an HST audit with the CRA. So those are the industries, those are the reasons, and then you can check back to part 2 where we actually do the thing. So if you found this video helpful, please don't forget to like, subscribe, and share this video. And don't forget to hit the notification bell so you always get notified whenever I upload new videos to my YouTube channel. And once again, this is Arielle from Fix My Books, helping you fix your books.